Good afternoon, everybody. It's really good to see you. My name is Charan Sarai. I'm the Training Delivery Manager for Thornfields and also the ILM Centre Manager for the business. My work is within the FPM group, and I'm sure some of you will be familiar with the group and the various aspects that this group looks after. So first practice management, the surgery website, and of course Thornfields. Like I said, it's good to be with you, and I just want to continue by introducing some of my colleagues that have joined me today. Firstly, Helen Murray, our National Account Executive, just giving you a wave there, and Jerry Devine, also a Training Delivery Manager for the South, and also our Workshop Content Manager. So just a little wave from Jerry too. And we have our web content editor, Jonathan Finch, with us today as well. So you've got a group of people that are here just to support you. And it gives me great pleasure today to introduce Phil Harnby, our accountant and friend to Thornfields. Phil looks after many practices up and down the country and particularly enjoys the engagement with managers that he meets and works with. And like I said, he's a friend to Thornfields, particularly to our training arm of the business. And today's all about you guys. FPM Group really want to give something back to you. And this is the way we're going to do it, or try to do it. Presenting through coffee mornings or coffee afternoons is a small way of doing that. All credit to all of you who've worked outstandingly throughout this last 2 years, 2 very turbulent years. And I hope that you find the presentations helpful with your work day. If you have any questions, please may I ask you to add them to the chat. And as you know, we are recording this session today. All relevant questions to today's session will either be dealt with today or responded to by sending you all a follow-up guide and a link to the recording. This will go out to all the attendees. The presentation itself lasts 20 minutes and is followed then by a 20-minute Q&A session. Any related questions may also be added to the chat, and our National Account Executive will respond to those directly. So over to you, Phil. Enjoy your session and thank you.
No, thank you very much. Hopefully you can all see my screen and all see that. The idea today, and there's a quick caveat. I'm on tea, so we got that bit wrong from the start. But I hope you've all got something nice to drink. The idea is a fairly relaxed and semi-jovial approach. Would appreciate that, with given what's going on in the world at the moment, the world is somewhat not jovial today. But hopefully this session will be quite useful. And as I said, we'll endeavour to get back to any questions that people have. So there is a bit of a disclaimer. I'm a third party. I'm a partner in an accountancy practice in the northeast of England. So any kind of information that you've taken from this isn't advice. If you pay me for it, it definitely is advice. But prior to that, unfortunately, it's not. So we've been based in the northeast since 1973. We've always looked after GP practices. We've also looked after dentists and care homes. Have a good solid understanding of the healthcare sector in general. And I've kind of specialised for the past 10 years, or since before I had hair, in GP practices specifically. So today's session is around year ends, and I think it was probably important to start with, well, why do we bother? What's the point in doing a set of accounts? What's the point in having a year end? And I'm not necessarily going to focus on specifically the healthcare elements of the year end, so kind of getting QOF figures in and those kinds of things, but the accounting issues that happen on the side of that. So for HMRC, so for the revenues point of view, the 5th of April is the end of the year, and for the NHS 31st of March, which are seen as the same date for tax purposes. there's a couple of asterisks on that, because you don't have to be. So you can have a year end that isn't the 31st of March. It can be any date that you want it to be, and that can add a little bit of complication to how practices do their accounting, especially if you're not tied into a quarter end, so March, June, September, December. And the second asterisk is then there because those rules are about to change. So if you aren't a 31st of March year end at the moment, your accountants will probably in the next kind of 12 to 18 months be talking about the changes that are coming in the next budget and the impact that that will have on partners. So if you're a non-March year end, it's certainly something you need to be thinking about. If you're a March year end, it's not something to worry about. But we're going to focus on a 31st of March because that's the majority of practices. And we're preparing those accounts so we can file a tax return. So the 31st of March next month, which it's quite scary. It's already the end of February. Next month will be our year end, and we're preparing accounts to file tax returns in 2023, and then pension certificates in February 2023. So there's a couple of things that we have to do, and law dictates we have to keep accounting records. We have to prepare a standardised approach to our accounting records to get that information across to the revenue to make sure we're paying taxes on time. So the accounts, we prepare the accounts on what we call the accruals basis, and to do that, we need to understand what are we owed, so our debtors, so who owes us money, and in most GP practices, most of that money will be owed by the NHS, so we'll have delivered some services, we'll have given some vaccines, and COVID vaccines over the past kind of 12, 18 months have been pretty prevalent in that, where we've been delivering those vaccines and being owed for that work. So we need to understand what those numbers are, and we'll have a look at how we do that. And then on the other side of that coin, we also need to know, well, who do we owe money to? So who are our liabilities? Where is money owed out? And this process of finding out is it before or after our year end is called cut-off, or that's the terminology that we would use. And that is exactly that. It's the cut-off between what belongs in that year, what belongs in this year. And that's quite important. We'll come on to that when we look at current accounts to be calculating what is owed to partners, and certainly departing partners when they come to leave a practice. So as I mentioned briefly before there, we're calling this what we call an accruals accounting approach. So it's when income is earned, not when we've received the cash. And QOF is a really good example of that. So over the course of the year, we get paid our aspiration. Yep. And up to the 31st of March, and I know the past couple of years have been slightly different with how QOF is being treated from a points point of view. But we are doing our QOF over the course of the year up to the 31st of March, but each month we're paid an amount which is called aspiration. Yeah. We then submit all our QOF reports, with the NHS then spits out a value that's due, and that's then called our achievement, and that is paid June, July-ish time. Normally in the June quarter statement, that money comes through, but you've earned that money before. So in accounting terms, we want to account for that cash that is received after the year end in the year that we're accounting for. And the same is true in any expenditure. So things that we've spent after the year end, we'd bring those costs into our accounts for the year end that we're doing. And that makes sure that the profit and loss is correct for the period that we're looking at. And we're not then, just because the money's come into a different period as when we've spent something or the cash has gone out at a different point, it means that profit, or any, hopefully never a loss, but those costs are attributable to the right place. And out of the back of that profit and loss, we then end up with a balance sheet, and that accounts for, and the balance sheet is exactly that. It is a balance of the assets and the liabilities that the practice has. So what are we owed? What are we due to pay out? Any cash that we have at bank, and it balances against what's owed to the partners, which is our current and capital accounts. And I've given an example of a current account here, and I'm going to assume that everybody in the room is part of a standard partnership, and by that I mean you're preparing partnership sets of accounts. You're not a limited company or part of a trust or anything like that. So each partner within the practice will have a current account. Now, I've assumed that this is just an individual partner within the practice, that they've been in for a number of years. They've got a brought forward figure, and I'll come back when we look at the end point as to what that means. But the current account, and the best way I've ever explained this to partners, it's a mini bank account that belongs to that partner, but within the practice. So it's not an actual physical different bank account. It's a virtual bank account, for lack of a better phrase, that sits within the practice. And within that, we pour in the profit. So the profit that they're earning each year goes into that current account, and then we deduct from that anything that is paid to them or on their behalf. So monthly drawings, we'd expect that to be paid to them on a monthly basis. Any other drawings, and that could be one-off sums of cash. I had a practice manager on the phone with me this morning. They've ended up with about £1,600, sorry, in their petty cash tin, and they're not quite sure what to do with it. So we agreed, let's just divvy it up amongst the partners, rather than, I think she had to travel 40 miles to a bank to pay it in, which was a little bit ridiculous. So again, that would go down as other drawings, or anything that isn't kind of regular. And the other thing that would not ordinarily go through your current account or a partner's current account would be their pension contributions, and that's paid on their behalf, deducted on a monthly basis. So the current account is reflective of what we've actually earned, what we've taken out, and then at the very bottom would have a balance of what is then due to them. So if they had left during that accounting period, that balance would be due. So if this partner had retired, and retired is a HMRC term, it doesn't just mean pipe and slippers and don't go back to work. It means leaving a partnership, which could be actual retirement, or it could just be that they're moving on or stopping working, and that monies would be due to them. So it's undrawn profit in the long term, so accumulated over time. It's profit that they haven't yet had chance to get access to. So I think it's important that we understand, how do we record this information? So it's kind of the first few slides are the principles of what we're trying to achieve. These next slides are kind of how we're going to do that, and different ways of doing it. And I don't get paid commission from anybody or any software provider, so I've put a number of different ones on the screen that are options, and you may use something different again. But generally speaking, practices are complicated enough to need some kind of software, and certainly for a long time, Irish GP accounts has been a prominent player in the market, but we've got things like Xero and QuickBooks and Sage that are certainly starting to see inroads. I'm an accountant, so I'm bound to like Excel, and the Excel logo there, yeah, there's nothing stopping you from keeping records in Excel. The challenge you always have is being able to interpret that information and to understand what's going on. And as practices have got significantly more complicated over the years, and the different streams of incomes, the different types of expenses, etc., that the need to have some kind of electronic record has become more prevalent. We've also got something coming along that the revenue have pushed down the track a couple of times now, and coronavirus was certainly one of the reasons why they pushed it down the path. Is that actually at some point you will have to keep your records electronically. through making tax digital. Now, if you are VAT registered, and I'll come back to VAT registered practices in a slide shortly, you have had to keep electronic records for some time now. That is going to move to non-registered VAT registered businesses as well. But that doesn't mean you have to go and use some software. You've just got to keep your records electronically. So again, if you're not keeping your records electronically, you need to certainly be having, a conversation with someone like ourselves or your own accountants about kind of what options are out there, what can we use, or what would be suitable in the environment that we're in as GP practices. I'm a big believer when we keep records and the information that we keep, that and the lips in the top right hand corner are one of my favourite sayings, which is KISS, which is keep it simple, stupid. We don't need to overly complicate things. And there's two things when we're kind of looking at one of the earlier slides with regards to what do we owe and what are we owed, that actually, a fairly straightforward table like the table I've got in front of us gives us a good idea of, are we waiting for anything? We've done the hard work, we have delivered the service, we've identified how much that is worth to us, is owed to us. Have we actually done something with it? So have we submitted it? Have we filled in the correct form? Have we done the right thing? And then most people stop and we forget about, did we ever get paid for that amount? And actually keeping a relatively straightforward list like this, it's actually quite valuable, and just understanding, well, yeah, I know the work we've done, I know if we've had to do a submission that we've done that submission, and I know that we've received it and on that date. Fully appreciate that the information that we've had from kind of NHS England, from PCSE, from the GMS statements over the past few years has been sporadic, and some of it has been very difficult to trace. I think I'm brave enough to say it has got better. I'm certainly not saying that it's perfect, but having your own internal records that means that right, well, actually I do need to follow up on that, or I'm not 100% certain, gives you half a fighting chance. Now, some of the softwares potentially can keep that information for you, but actually, a little table in Excel like that does a pretty good job of it, and I think it's not something that we should just be focusing on in the year ends. It's not something we should just be worrying about next month. It's something we should be kind of worrying about across the course of the year. But from your accountant's point of view, from my point of view, certainly as a 31st of March year end, we absolutely want to know, well, what are you owed at the 31st of March and what aren't you? And it's a huge benefit to us when somebody comes along with something like that, rather than just going, we're owed something. And we can pull together some of that information from after-date statements and bank statements and things like that. But if you've got a record, and actually, if we're going to pull that information together, it could be kind of 2-3 months after the year end that we're coming back with some draft accounts to look at. It's a long time that you've been owed some money for, and some of those figures could be large. And the same is true for paying anything. I think sometimes with invoices that you owe money on, it's much easier just to have a pile of papers on the table that you've written paid on when it's paid. And again, that is perfectly acceptable if it works for yourselves. It's finding something that works for you and doesn't miss anything along the way. So there's a couple of other areas that I've kind of highlighted as specialist areas that we need to be thinking about when it comes to our year end. And payroll is potentially slightly different because the payroll year end is always the 31st of March, irrespective of what your practice year end is. So if you're a June year end, the HMRC year end process is still to the 31st of March for your employees. So printing off things like P60s, doing your final submissions for the end of year process, have to be done by set dates at the 31st or after the 31st of March. And again, I think when we're around this time of year, we also normally have a plethora of salaried GPs asking for information, and we'll come back to that when we look at pensions with regards to their salaries. And of course, there's also things that we need to do with NHS pensions online as well. So we've not just got the HMRC year-end process at the end of March, beginning of April. We've also got the pensions online, the SD55 forms where we put on pension contributions for employees. So making sure that stuff is done. And it can, certainly your pensions online, I've seen that being forgotten about a number of times, especially if your accountants aren't specialists and aren't kind of giving you a shove along with regards to that, because you can very easily miss the reminders, and it only really comes to light when an employer looks to retire and the pensions office don't have any figures for them. So it's certainly something that you know is worth getting right, doing it on time. And again, it's a bit like the HMRC payroll year end. You only do it once a year, so setting aside a bit of time, paying a bit of attention and thinking about what's being done, I think is an important criteria with that one. So I think from some of the questions that we had kindly sent in prior to this presentation, I think one of the practices at least was registered for VAT. So VAT is ordinarily, and there's probably a big caveat with that ordinary part, but ordinarily done on a quarterly basis. But annually, if you are partially exempt, you have to do an adjustment. Without going into huge details about what partial exemption is, it's effectively an ability to once you've looked at all 4 quarters, to come up with an average over that quarter to adjust in your year-end return, which again is normally the 31st of March. So again, it's something you need to be aware of. And when I trained to be a chartered accountant many years ago now, VAT was then, and has certainly got more complicated now, seen as a very specialist area, and I would always take specialist advice, especially if you're a GP practice, because it's just not straightforward, and there's a lot of things that you can and can't claim, which can have a big impact on the potential refunds that the practice can receive. So the final bit that isn't necessarily to do with the 31st of March, but it's certainly done around this time of year, and there's a process to be done, is your type 1 and your type 2 pension certificates. So as I put in brackets there, type 1 are for partners, so pension contributions for partners. Generally, and I've never come across a practice that does them themselves, but your accountant will prepare those certificates for you. And this year, well, they've just extended the deadline till the 7th of March. This year, it's now all been able to be done online via PCSE, to lesser or greater success, I think is probably fair. So that process should be well underway at the moment, if not complete for your practice. But the bit that I've kind of highlighted is probably the more relevant part for yourselves, which is salaried GPs. As I mentioned at the start, most salaried GPs around this time of year come and ask the practice manager, can I please have a copy of my P60? It's really important to understand that that's not the right figure. Your P60 is not the right number to be taking. So if they're asking for the P60 and it's to do with their pension certificate, they should be reading the guidance to understand what figure they should be using. So it's also important to remember that we focus and fascinate ourselves around the year end, and it's certainly a fundamentally important part of GP finances, but it's a cycle, and the world doesn't end on the 31st of March. The 1st of April happens and the world continues turning. So we should, at this point of year, be actually looking ahead. Say, well, okay, this is where we've got so far. This is how things are progressing. We're planning for, we're budgeting, we're forecasting for the current or the future next year. And again, we've got to have submitted by Monday of next week our pension estimates for partners and salaried GPs. So as part of that process, we should be looking at, well, what anticipated changes do we have coming up? Is anything we're aware of? Is somebody going to retire? Are we going to be looking to recruit a new individual? So there is things that will be coming up that we need to think about. And of course, a big impact on 2023 will be the GMS contract. Now, I'll hold my hands up. I didn't check first thing this morning. I did check yesterday and it hadn't been released. So I suspect it still hasn't this morning. But again, that focuses what we're going to be doing for the next 12 months. And we need to have an eye on that as to what that will bring. So that, I hope, brings us to a point of questions. So I'm going to change screens. So I lost the ability to see everyone, so I now can again. So I've dropped the screen off. So yeah, just if anyone has any questions, if we can put them in the chat box, I'll be happy to answer them now. So if I can't get back to them, or if they're really specific to you as an individual, we'll aim to get back in the next week or so. But it's nice to see we've got someone who is supporting of Xero. I'd agree with that. It is a pretty good piece of software, and certainly makes life a lot easier. I think any software makes life easier, or it should do at least. If it doesn't, you maybe want to think again about what software you're using. So I'll give it a couple of minutes. I'll finish my now somewhat tepid tea. If anyone has any questions, just pop them in the chat. I've either answered them all, which I find unbelievable, or I've bamboozled everybody. Well, there was actually one more slide, which was this is hopefully going to be a series of presentations covering a variety of different subjects. If I reshare my, so I've got to do it the other way around, 2 seconds. I seem to be able to do 2 things at once, which I'll share that screen. Yeah, so these are the kind of the topics that we've come up with so far. But if I can draw everyone's attention to kind of the bottom one, if there's anything that is an area that people want us to focus on, or would like some more detail around, or would like to kind of spend a bit of time on, by all means include that in the chat, and we'll try to get to that over the coming kind of weeks and months. Yes, so in response to yourself, Claire, yes, they have delayed it till the 7th of March, so that there is still a little bit of breathing space between where we are now and that deadline. And I think that the one thing that you kind of got to remember with the deadlines for the pension certificates is it's purely for updating your total reward statement. So as long as you get your certificate filed by that deadline date, PCSE guarantee to get the information to NHS Pensions, who then guarantee to get that information at your total reward statement by the August update. So if you miss the deadline, it's not the end of the world unless you're about to retire. So that can have a bit of an impact on retirement dates. So if they miss the August update, it'll get updated in the November update. But yeah, there's still time. Are there any common mistakes? I think the big one is not knowing what you are owed, and the number of times that we've kind of gone out to practices and said we think you're owed like 20 grand, and they go, really? You think, well, as an external accountant, I shouldn't be surprising my clients. That's kind of my view to life. I should be telling you something you probably already know, but we're just wanting some reassurance. And yeah, there's definitely a running theme. I think some of that, or most of it, I should re-caveat that, isn't incompetence or inability to do the job. There's just so much of the job now, and it's not unsurprising that things drop through the cracks because you've got income coming from here, from there, from that. PCNs are now doing things as well, and there's just a lot happening, which just makes the job more difficult. Hence why, kind of keeping it simple, stupid, that just basic spreadsheet that says, right, where's, I've done a submission, put it on there, right, I don't need to think about that anymore, because I'm the kind of person that once I think I've done something, it goes out my mind. So to me, the submission is I've done all I can do, so that would go out of my mind. So having that kind of that list of spreadsheet that just says, right, I've not had now for 6 months X, Y, or Z. You can spend a bit of time on. But yeah, I think that's that as well has probably the biggest impact on the practice, because if you forget to, or a salary GP forgets to file a type 2, it only impacts that salary GP. It doesn't impact the practice as a whole. If the SD55s don't get done again, it just impacts the employee when they come to retire. So you can catch up these things where there is time scales for some submissions. So if you've not done the submission, you can go beyond that point. So to me, if you've done the work, you've done the hard bit. So being paid should be, big bold capital should, the easy bit. So I'm brand new to Xero. Do we know if we can create the money owed in there? You can. There is. It would take me quite a while to explain how to do that, if that makes sense, but be reassured you can. So certainly, what you might struggle with is things like that they're going to come through on your GMS statement. So if it's anything that's going to come through on the GMS statement, that would be a little bit more tricky. But you could record it in Xero, so not necessarily make the accounting entries, but you could record it in there. But certainly, if you were sending out medical reports or things like that, then you absolutely can create the invoice in any of the accounting packages, and that will then show as money owed until it's paid by anyone, and not just medical reports, anything else that's kind of not going to come through on the GMS statement. You could include that, and it would bring that through. So what happens if a payment for this year isn't received until next tax year? So is that kind of any payment for anything, or anything in specific? Yeah, so we would include that within what we call debtors, some money that's owed to the practice. We need to identify what that is, and that's sometimes the problem, that if you've not done the submission, or if you've done the submission and it's never been received, if you've not recorded that somewhere, we're never going to know. Yeah, and the practice would never know either. So if you've recorded that and we know that it's due, it comes in as a number on the balance sheet, as an asset, so something that's owed to it. It's got value to the practice. We include it in income in the profit and loss, so the profits are up because we know we're owed that money. The partner's profit share is then right, so they're owed that money through their current account, and at some point when it's received in the future, we can allocate those two together. Yeah, that asset's now being cleared by the fact we've been paid some cash, some money into the bank or through the GMS statement, however it's been received. So but and you've then got to take a view, well, will it ever be received? So, if it's something that you've suddenly thought we should have 2 years ago claimed for something, you might want to take a view until you've actually received the money, because PCSA, NHS England going to say no, it's well beyond where we're prepared to pay for. But if we're relatively confident that it should be being received, then yeah, it's appropriate to include it at that point. And certainly when you've got kind of changes in partners, it's really important to get that balance right. It's no good being owed 50 grand and not paying any attention to it. Partner A and B leave. We've now got new partners that have joined, and the cash receipt is received in that year. Well, those partners are going to benefit from that 50,000, having done nothing towards it, where partner A and B have lost out. So that's why we worry about that cut-off and want to pay attention to it, especially when you've got changes in profit share, or more importantly, changes in partner. Because partner who retires and something happens and the money comes in later, well, they did the work, so they're entitled to it. And the same with expenses. So the partners commit themselves to a massive amount of expense. It's important that balance is there as well, so that new partners aren't suffering from old. I don't think there are any other questions, unless anyone else in the room has one. Perfect. Well, thank you very much for your time. I hope I hope it was useful. It's nice to see everyone and be doing things again, which is certainly a change over the past couple of years. As I said, if there are any other topics that you specifically want us to look at, do either leave it in the chat before you head off, or drop Thornfields an email, and we'll hopefully look at those over the coming weeks.